our best investments by far have been real estate. And we've owned 5 homes. And of all those homes, we've earned the biggest return on those versus stocks. Welcome back to the show, everybody. Hope you're doing well. Jeff Smith, Fairways in Finance. Today, what I want to talk about is 3 reasons why I think real estate is a better investment than stocks. Now, not that you shouldn't invest in the stock market, and Danielle and I have money in the stock market. It's a great place to invest. It's relatively easy because it doesn't take a lot of effort to get money into the stock market. You can just sign up for an E-Trade account or talk to a financial advisor. And so, that should definitely be part of your long-term retirement plan to put money into stocks. But as I'm getting older, I'm starting to reflect a lot more on, things that have happened to me during my life so far and during my career. And when I look back for Danielle and I, our best investments by far have been real estate. And we've owned 5 homes, and of all those homes, we've earned the biggest return on those versus stocks. And so that's where I think that people should focus a lot of money when investing. And that's where we're going to turn a lot of our attention to in investing moving forward. We're still going to put money into the stock market every month, but we're going to put more of a focus into developing a rental real estate portfolio, commercial and residential, in the next 10 years. That's a big goal of mine. So 3 reasons why real estate is a better investment than stocks. The first is called leverage. So leverage means that you're borrowing to purchase a real estate asset. So say, for example, you've got 50 grand. If you had 50 grand to invest, you could put $50,000 into an E-Trade account. Now you've got 50 grand in the stock market and you're invested with 50 grand in the stock market. If you took that 50 grand and went and bought a primary residence, you could put 5% down on a $1 million home as your primary residence. Now you have $1 million invested in the real estate market. So if stocks make 7% and real estate makes 3 or 4 or 5 over the long haul, 5%, let's say 4% on $1 million is $40,000 a year that home is going up in value. So you're gaining 40 grand a year in equity just based on the value of the real estate. 7% on $50,000, let me use my calculator here so I don't hurt myself, is $3,500. So if you're making 7% in the real estate market versus the stock market, or excuse me, if you're investing $50,000 in the real estate market versus the stock market, 7% return in stocks, 5% return or 4% return in real estate, you're making $3,500 versus $40,000. So that's $36,500 more you make by putting that money into real estate. That does not take into account a bunch of other write-offs and deductions and stuff you get that I'm going to talk about in a minute here. So the leverage with real estate is huge. You cannot invest with leverage in the stock market the same way that you can in real estate. Now, leverage can get you into trouble as well. If you over leverage yourself, you get yourself in a situation where you have too high of payments and you can't meet the obligations, then you could put yourself into bankruptcy. So you don't want to do that either. You've got to be more careful investing with leverage because it could come back to bite you if things weren't good. So I think for the average person, a great strategy to build a real estate portfolio without having to put a ton of money down is to buy a new primary residence every 2 or 3 years. So if you buy a primary residence, put 5% down, live in it for 2 or 3 years, then you convert it to a rental and go buy a new primary residence. So all you have to do is just go buy a new primary, move into the new primary with 5% down, and then rent out your old primary. And what's great about that is on a conventional loan, if you get a lease agreement in place, we can use 75% of that lease income on your departing residence as qualifying income for the purchase for the new primary residence. So if you buy each home as a primary, you have to live in it for at least 12 months. But if you live in it for at least 12 months, you're playing by the rules. And you get a better interest rate and lower down payment. If you buy the home straight up as an investment property, you have to put at least 15% down, and the rate is almost 2% higher, and there's more fees. So if you're willing to buy and move, buying a primary residence every 2 to 3 years can be a great way to build up a real estate portfolio. You do that for 10 years, and you could have 3 to 5 rental properties plus your primary residence. Now, as you acquire these properties with leverage, it's important to be mindful of the fact that you've got a lot of debt out there that needs to be paid in, by way of mortgages. So if each property is rented and the rental income is covering the mortgage payment, then you're good. But where you run into problems is if you have a vacancy, or if the rental market turns down, it's more difficult to get a renter into the home, or if you have a renter that goes in and trashes the place. So as you're building this real estate portfolio, super important to have cash reserves. And you should have at least 6 months of cash reserves per mortgaged property to cover expenses, vacancies, unexpected things that would come up, repairs, etc. So if you're going to use leverage, it's very important to pair that with cash savings so that if you run into trouble, you don't all of a sudden go bankrupt in 3 months because you can't meet your debt payments. So very important when working with leverage to be careful with it in that aspect. The second reason real estate, in my opinion, is better than stocks is access to cash. So let's say that you buy, that first primary residence, and let's say you live in it for 3 years, and let's say the market's really good. It goes up 10% each year. So if you bought a $500,000 home, 500,000 times 1.1 times 1.1 times 1.1, that home would be worth $665,500. So it would have gone up 165.5 in value over 3 years at 10% a year. That's if the market's really good. Say the market was just average, it might have gone up 70 or 80 grand. But regardless of whether it's 165 or 80 grand that it's gone up, you can get access to some of that equity by refinancing the mortgage on a cash out refinance or taking out a home equity line of credit. So if you do either of those to tap into the equity, let's say you pull out 75 grand out of the home. The 75 grand, is a loan against the real estate, but it does not count as income from tax purposes. So you can get your hand on $75,000 of cash without having to pay any income tax. You do have a mortgage payment that you're making or a home equity line of credit payment that you're making, but you've got that cash in the bank. So you can take that cash and use it to purchase another piece of real estate. Or you can take some of that cash and use it to purchase another piece of real estate and bolster your cash savings. So that can work really well, especially when rates are in a downward cycle and you can refinance, lower the rate on the mortgage, and take equity out at the same time. A lot of times, depending on how much you're taking, you can do that with hardly increasing your mortgage payment. So as you take this equity out, if you can keep the total payment, equal to or less than the rent that you're bringing in, then you're not having to pay out of pocket for those payments on the equity that you get out. So that's one. And then the second way you get more access to cash with real estate is with the cash flow on the rental itself. So if you have a strong rental property where the rental amount is more than the mortgage payment and your expenses, you're pocketing cash every month. So if you're cash flowing $500 a month on 3 or 4 properties, that's a couple grand a month just coming into your accounts without you having to do anything to work for it, aside from some management on the properties. So that's another way that having real estate can get you access to more cash. Okay, cash is king. That's always the saying. Cash is king because it's true. So real estate gets you more access to cash. Number 3 reason why real estate I think is a better investment than stocks is you have lots of tax benefits with real estate. So real estate, you can write off what's called depreciation. So depreciation is a accounting method that allows you to deduct a certain percentage from your taxes every year based on the value of that home. So based on the value of the home depreciating for that asset. And the great thing about it is most homes, even though they're getting older and in need of some repairs, if you're in a growing market, you're able to write off depreciation, but the value of the home is going up. So it's a great write-off. Mortgage interest can be deducted. So your expense for mortgage interest is a tax write-off. Repairs, general maintenance, contractors, all of those expenses can be written off as well. So it's a great way to lower your tax bill and your taxable income by deducting all of these expenses on your real estate portfolio. And then in addition, if you have a primary residence and you work out of the home, you can deduct money off of your taxes for working at home as your home office. So tons of good tax write-offs with real estate that you don't get at when you invest in stocks. So that's another great reason to invest in real estate. And there's a lot of others, but those are the three that come to mind for me personally off the top of my head. And then, one other point with buying real estate, I think it's a great idea. Obviously you want to buy these homes at the best price that you can get them. And so I think the best way to get real estate at a great value is to either get lucky with market conditions and just buy at the right time, or B, buy at a time when there's a lot of supply, because then it's harder for sellers to sell and they're more willing to cut you a deal. Or if you buy a home that is ugly, the ugly stepchild home, and that home requires some work on your behalf. It requires painting. It might require flooring or redoing cabinets. It might require redoing the yard, whatever. But if you're willing to put some money and time into the home to remodel it, improve it, you're going to improve the value by a huge amount. So the house that Danielle and I are in right now, we just recently sold it, and we bought it for $725,000 in 2016. We put in about $350,000 into the home over a period of 6 years, because we've been in this house for 6.5 years. So we did a lot of remodeling the flooring. We've repainted it a couple of times. We completely redid the front and backyard, put in an awesome pool and backyard. We redid all the cabinets. We refaced them, new countertops. Basically, we remodeled the entire home except the bathrooms. Okay, so we spent about $350,000. So we were into the home for close to 1.1 million, and we sold it for 1.7, and we lived in it for 6.5 years. So we made 600 grand on this home, and we got to live in it for 6.5 years. It's a great home. It's a great place to live. And we got a lot of tax write-offs with it as well. Now, we got lucky with benefit of COVID prices. The two of those last years, home values were going up like 25%, which is super rare in the real estate market. But, say that didn't happen. I think the home, would have been worth 1.2 or 1.3, so we still would have made $200,000 or $300,000 in a period of 6 years, that's a ton of money. That's a great investment. So real estate, if it's purchased right, can be an excellent investment. And just like any other investment, the longer you hold it, the more it's going to go up in value. So the longer you can keep these properties in your portfolio, the better off you're going to be, because really it's very difficult to time any kind of market. When you buy just at the right time, it's basically luck. And so the longer that you hold an investment, the better chance you give yourself of, being a part of some of the really good years and also some of the really bad years, but it will smooth itself out and give you a nice return the longer you hold the asset. So that's real estate. 3 of the reasons why I think it's a great investment. DM me, give me a call. I'd be happy to talk to you or answer any questions you have about this. I own a mortgage company, Tiger Home Loans. We're a residential mortgage lender here in Arizona and opening in Tennessee, and would love to help you on your next real estate transaction.